In today's topic, let us discuss about the chapter ledger. So, we have already discussed in detail about journal and also we have seen problems in connection to this. So, what is ledger? How it actually proceeds? So, ledger is actually the result of transactions being made in the journal or in the subsidiary books. Okay. So, this will be the actual thing that you will understand about transactions which is entered in the journal as a first step, and from the journal, okay, it all the subsidiary books, it will move to the ledger. What do you mean by subsidiary books? The term subsidiary books, okay, refers to books like for accounts like purchases or sales. When it is made on credit, okay, we open separate books. Also cash book is a subsidiary book. In the sense, all cash transaction will be recorded under cash book. So this topic we will be discussing later on in a separate okay, heading. So let us now move into the meaning of a ledger. So ledger is nothing but the summary statement of all transactions relating to a person. Okay, it could be a person or it could be an asset, okay, liability, expense or income. And what does it show? The net effect. So what will be the value of each of these at the end of a term? That's what we mean by net effect. It is also called as the principal books of accounts, and it includes all the three accounts of, namely personal, real and nominal. So these will be prepared, okay, in an account wise form, so as, okay, we can be able to know the balance with the help of the preparation of ledger. So these ledger are going to be based on journal entries. Only if there are journal entries, then we can from that proceed to prepare the ledger. So the balances in the ledger, as we have seen, it shows a net effect. Now how does it reflect in the, what does it reflect in the case of personal accounts? It shows the amount due to creditors and the amount due from debtors. Okay, that means how much one has to payable, the business has to payable to its creditors on account of credit purchases. Okay, similarly, when it makes sales on credit, it should know what should be the receivables from such debtors. Real accounts will disclose the value of assets. Okay, what will be the value of cash or the value of furniture at the end of a period and so on. Whereas nominal accounts pertains to the finding of incomes and expenses. To state a few incomes, we can say commission received, or okay, we can say like dividend earned. So these are all various types of incomes, and expenses could be like payment of rent, salaries, etc. Okay, so ledger may be maintained as a either maybe a bound notebook or called as a bound register, or if the transactions are voluminous, large, and the size of the business is also too big, so per day a transaction will be plenty. One day itself a transaction will be many. So they cannot just keep maintaining several bound books in this regard. So what do? They can adopt a system of maintaining loose leaf, okay, like loose leaf ledgers, and they can just maintain it by okay, just with a spiral binding. So usually, okay, they will maintain an index in the beginning of the ledger in this case, okay, so that what is going to be done may be recorded, and as and when, okay, they want, they can also okay, just try to make recordings. So ledger, if it is going to be maybe prepared, we see that it will also get automatically prepared. So once a journal is done, automatically a ledger also can be prepared. Let us quickly look at the utilities of a ledger. So quick information at a glance of a particular amount. So there could be several transactions, okay. So each of these transactions should reveal the balance. If there are, okay, many, take for example the personal accounts, there may be many creditors, many debtors. So you should know individually which creditor should payment should be made to, and from which data amount is received. So like this, lot of information will be helped to be maintained, especially in whether it is real, personal or nominal. And then control over business transactions. Okay, here we see that various accounts reveal the net balances. So it helps the business. For example, if it is expenses, they can take a control over the expenses. Okay, minimize the expenses to maximize the profit. Okay, so it serves as a tool to control the various transactions. And then trial balance can also be easily prepared. So the trial balance, in the concepts also we have seen, as well as a separate topic may also be dealt in the future. So this will form the basis to prepare the final accounts, that is the financial statements. So why it is prepared a trial balance? To have a check on the arithmetical accuracy. So this will be the next stage after ledger. And then finally it helps to prepare the financial statement. This is the actual aim to accounts to be prepared. So this is the statement which or account which reveals the true profit and the loss, and also the balance sheet will reveal the financial position of the business. So for these two results, we need this financial statements to be prepared, which also is possible through ledger. Let us discuss the format of ledger. Here you can see, a T format is actually prepared. So a T format is nothing but it is divided into two parts. You can see here, with date. Okay, so you can just see here date, particulars, LF, amount. Okay, on the debit side, this is debit side. Okay, and on the credit side again, date, particulars, LF, and then sorry, it's not LF, it's JF. Okay, only for journal you say LF, it is JF here. Okay, and then the amount. So what does each of these mean? Why should we prepare a two-sided account? Because as per the rules of double entry system of bookkeeping, it is always following a two-sided. That's why we prepare a T format, and you can see each of this will be prepared for an account. Okay, every transaction involved will be having one ledger. So what about the date? So as we see in journal, the date is recorded. Particulars, the name of the particular account is involved. So JF will actually give you the details, that is the page number of the journal or subsidiary books, from which page it is posted. For example, it is in page number 30, journal entries for this. So from 30 we are posting to maybe page number 80. So here in this column, what you will say, you will mention as 30, for that particular. So this is how we will be actually treating, able to follow, right? So in this regard, we can see that whatever so is followed here will give rise to accounting, able to follow. So ledger is very important part in order to actually proceed with the next stages. And amount column also, it will enter the amount. What the major difference between the journal and the ledger? Recording. So first it's about the recording. So here, as and when the transaction takes place, it is recorded. But ledger, maybe it can be at the same day if they want, or end of a specified period, such as end of the week or end of the maybe 15 days once, fortnight, end of a fortnight, or once in every fortnight, or it could be monthly, depending upon the transactions occur. So this is recording. Which stage does it occur? Stage of recording is journal is the first stage, whereas ledger will be the next stage, that is the second stage after journal is prepared. What is going to be the order of record? What order we are going to record? So journal will be in a chronological order. What do you mean by chronological order? So that is date wise in the order of occurrence. Which transaction occurs first in a particular day, that will come first. Okay, whereas in the ledger, so we follow account wise. So account wise means, so first the capital account will come, so it's like that. Okay, so you can see that, able to follow. And then process of ledger says that here the process is called as journalizing. We have learnt in the previous topic. Whereas ledger is nothing but, okay, posting from journal to the ledger. So okay, we saw the meaning of ledger. So here especially, what does it say? Posting from journal to the ledger. Okay, posting refers to what? Actually transferring the items from the journal to the ledger is called as this posting. So this posting will be taking place okay, as a process. We have already discussed like what facilitates the preparation of trial balance. Of course, it's not the journal, but it's the ledger only. Likewise, what will be the basis? So to prepare a journal, we need what? Source documents. What are source documents? Like voucher, cash memo, cash receipts. Okay, all this we need, debit note, credit note, all this we need to make recordings. Whereas for a ledger, journal only is the okay basis. Finally, how can one know this net position? Net position is nothing but, okay, what will be the final amount. So that means, okay, only ledger can reveal this net position and not the journal. So okay, let us discuss one okay, problem, so that we will see how this ledger takes place. So here I am reading now problem number 1 from the journal. Okay, so journalize the following transactions in the books. Okay, no, is not mentioned who's okay, the proprietor, and then they are asking to post to the ledger. So 3 transactions. January 1st started business with cash, on 5th paid into bank, and on 7th purchased from Ram for cash. So when we say for cash, it means it is a cash transaction. Okay, so that is what we have to give importance to. Okay, next we proceed to pass the journal entry. So we have seen in detail how to pass journal entry, so just briefly shown the journal. So I record the year once, month once, and 1st January. First started business with cash means cash account debtor to capital account 10,000. Then paid into bank says 5,000. So cash is going out here, and bank is going to be the debit the receiver. So bank account debtor to cash 5,000. In 7th, on 7th it says that, okay, goods are bought from Ram for cash. So cash transaction only, not credit, because for cash is day, as I told you already. So what do you say? Purchases account debtor to cash. So here purchase being nominal, we debit, and cash really goes out, so we just credit cash. So now based on this, we shall see what are the accounts involved here. So I just write here. So one, as it says, capital is there, then you come across cash, then you come across bank, and finally you come across purchases. So how many ledger is coming across? You come across 4 ledger. Okay, so we are going to prepare or open up 4 ledger, and we are going to see now. So I have just opened ledger accounts. First capital account. So what does it say? Cash to capital. So in capital, so journal, from journal when you post to the ledger, it will take opposite places. So in the journal, debit will go, okay, to credit part of ledger, whereas the credit part of the journal, okay, it will go to the debit part of the ledger. So please be clear with this, very clear. Okay, now, so as I told you, capital where it is in the credit part. Okay, so now opposite to that, what do you see? This is what we have to take now, that is cash account. So cash is now in the debit, means when you take it here, an opposite transaction will be shown as buy cash, which is 10,000. What do you see there? Buy cash, which is 10,000. Able to follow? So what do we do? So as usual, you open up, okay, as per the format, date, particulars, JF, amount on the debits, the same thing on the credit. So in the credit side, I am recording 2016 January 1 and I am showing by cash account rupees 10,000. Okay, so now in capital I have shown cash. So in cash also I should show capital. Let's see how. So for that I am opening another number 2 as cash account. I write the format. So every account ledger will involve format. So 4 accounts if I say, then I will have to open up 4 ledger. Okay, 4 ledger I have to open because there are 4. Okay, so hope you are getting clear with this, right? Now, so as in capital we have, what did we do? We have, okay, you can see here, as in capital, okay, we have actually, what did we do? We have credited. Okay, is it clear, this one part? Similarly, now, so what I am going to do, in cash I am going to debit. So in cash what I will do, I will be debiting. I repeat once more, in capital I have credited means in cash, okay, I will be debiting. So I am just showing this, okay, so the highlighting so that you will understand opposite sides it will appear, right? So now the first entry I have shown. Let us now move on to, okay, discuss about the rest of the transactions. Now second transaction says what? Bank account debtor to cash account. What is this? Bank to cash. So this is the second entry. As per that, so I have to now in the cash show bank. So where is bank? In the debit side. So when I take, okay, from journal to the ledger, I will show in the credit side. Okay, I will write the date as so now only I am just showing the credit. So let me write the date along with the year and month. 5 by balance, okay, by bank account rupees 5,000. So here I have shown. So next what I should do, I should open a bank account. So in bank account where it should come? In the debit side. If there it is in the credit side, then in the bank it should come to the debit side. So are you able to understand? So I write the date, I write the okay, particular to cash account. So this is how every transaction from in the ledger, if it is appearing in one account, to the, okay, extent of the same amount in the opposite direction, it should appear in the another account. Able to follow? Okay, right. So now what we will do is, so we will just okay, discuss about the other entry, which is purchases account debtor to bank account, purchases to cash. So this being a cash purchase, cash transaction, now I am going to take this particular journal. So here I need cash and purchase. So first let me show in cash. So in cash, okay, purchases where is in the debit part. That means purchases will come along with the date on the credit part. So purchases is in cash, purchases is debited means in the ledger. So journal it is debited means in the ledger it will be credited. That's what I am telling you. Okay. Now in the okay, cash I have credited means next I am opening the purchases account. Can you see here? And here if it is credited in the cash, whereas in the purchases account I will be debiting. What I will be doing? I will be debiting. Okay. So this particular problem I have shown okay, by just highlighting the values. Let us, okay, see another problem by just working on. So hope you are clear with this problem, students. Okay, so just try to understand this concept, okay, clearly. Problem number 2. Pass journal entries for the following transactions and post them to the ledger. 2017, okay, it says on August 1st, Dharma started business with cash. So Dharma is the owner. On 6th, cash received from Ganeshan 10,000. On 10th, rent paid is 3,000. On 20, received commission from Anand is 5,000. So we will pass journal entries for that. So in the books of, okay, so what do we see in the books of Dharma, journal entries? So first, what are we going to do is, okay, cash account debtor to Dharma's capital account. So cash is coming inside and Dharma the giver, personal. Okay, so write the narration as commenced business with the cash. Next, cash received from Ganesan. What do you say? Cash comes in, and here also, okay, giver is the Ganeshan. So I am crediting Ganeshan. Okay, so amount you show 10,000, and on 10th it says rent is paid. So rent is paid, rent is nominal, so debit all expenses and losses, and cash is real, so credit what goes out. Okay, so this is very simple. So we already seen how it will appear in the we have discussed about journal in detail. Next is the last transaction on 20, received commission from Anand for rupees 5,000. So what do you say? Cash comes in being real, and this is nominal, so credit all incomes and gains to commission received. Able to follow? So this is how we will be journalizing. So next what we will do is we will proceed to prepare the ledger. How will you prepare the ledger? So to prepare a ledger, first thing you have to decide what are the accounts we are going to open. In this regard, let us see now what are the accounts that is involved in. One is capital of Dharma, so Dharma's capital. Next is cash. Okay, from first entry two accounts we see. Second entry we see Ganesan, already cash we opened. Okay, from the third entry what do you see? Rent. And from the fourth entry we see commission received account. So totally 5 ledger we will be preparing. So how do we proceed to prepare the ledger? We shall see now. Okay, so let us now discuss this solution in the books of Dharma ledger account. So I opened here the ledger individually with format. So date, particulars, day of amount, debits and credit. Dharma's, what do you see here? Dharma's capital account. Then one cash ledger, Ganeshan account, rent, and then commission. So these are the ledgers I opened. First let us start with the Dharma's capital account. So in Dharma's capital account, cash is coming. So entry is what? Cash account debtor to Dharma's capital account. So cash is debit in the journal, means in the ledger it should come where? Means it should come in the credit side. Here it should come. So let us now start entering. So I will just write and show you how it actually comes. So I write the date now. So in Dharma's capital account, so it will come as 2000. So the date is actually 2017 August 1. So what I say? By cash account. So the amount is 70,000. So in Dharma's capital it is over. Now I have to go to cash. So in cash it will come where? In the opposite side. So in Dharma's capital, if it is credit side, means in cash it will be in the debit. We will see what we are going to write. Again 2017 August 1. Here what I write is to Dharma's capital account. So the amount 70,000 I enter here. Able to follow? So with this first entry is over. Next it says number 2, the entry as cash account debtor to Ganeshan. So in cash what I will show is, I will write the date as 4, and here I will show to Ganeshan account. What I show? To Ganeshan account. So here the amount is 10,000. Able to follow? And in Ganeshan account what I will do? So here if it is debit, in Ganeshan it should be in the credit. So hope you are able to follow. So now what I do? So I will write the date again 2017 August 4. I will write by cash account, because in cash it is Ganeshan. So in Ganeshan it should be cash. How much? It should be 10,000. Students, followed? Now second entry is over. Third entry says on 10th paid rent. So rent account debtor to cash. So first let me show in cash account. So I say on 10th, it is actually what? To cash account, so it will be rupees 3000, and in rent it should come in the credit side if it is so I'm sorry, so I just made a mistake. So here it should come to rent. In cash it should come to rent rupees 3000, means in cash it should in cash it is rent, means in rent it should be just the opposite. I'll just highlight and show. This is what I'm doing. So in the cash is rent is debited, means in rent cash will be credited. Okay students, in rent cash will be credited. So I write the date 2017 August 10 by cash account rupees 3000. So third entry is over. Last entry, cash account data to commission received. Okay, cash to commission received. So that means, okay, so again in the cash what will come? It will be showing again a debit. In the cash it will be showing actually a debit. Okay, so on 20, okay, on 20 to commission account, so this will be rupees 5000. So next in commission account it will be credited. So write the date 2017 August 20 by, because in cash what did we show? Okay, in cash I have shown to commission. Okay, so in commission account what I must show? By cash account rupees 5000. Okay, so you can see how it is appearing. So this is how it will be coming. Able to follow? And just a minute, in rent I just forgot to show you. Let me just show you that also. So this part, let me just show you this. So in, let me just repeat again. So I am just dealing with entry number 3, rent account data to cash. So what did we show? In cash, if rent is coming, rent is debited. In rent, cash must be credited. It should come here. Now I will write and show you. So 2017, the date is August 10, what I say, by cash account rupees 3000. Okay, after this only we will go to commission, just slightly the order got changed. Hope you follow students. Now let us discuss now problem number 3. The following balances appeared in the books of Vinod on 1st January 2018. Assets shows cash rupees 40,000, stock 50,000, amount due from Ram 20,000, rupees machinery rupees 40,000, and liabilities amount due to Vijay 10,000. Pass opening entry, journal entry, and post them to Vinod's capital account. So here, okay, there you can see list of assets and liabilities. We will see how it appears in the journal entry now. So I give the heading as opening entry, and here I start entering the date 2018 January 1st. So it says cash account data, okay, 40,000. Next asset mentioned is stock account data, which is going to be 50,000. Amount due from Ram. So Ram is a debtor who buys goods. In future he will be paying rupees 20,000. And then machinery account debtor, okay, it will be 40,000. Now I have recorded all the assets. Now I am going to record the liability, which is, okay, the creditor. Who is the creditor? Means is Vijay account, which is 10,000. If you see, the total of debit should be equal to credit, no? But total of debit is 1,50,000, whereas credit is only 10,000. So you are getting a balance, a difference of 1,40,000. So I am just writing this difference, 1,40,000 What is this? Nothing but, who is the owner? Vinod's. What capital account? This will be the actual balancing figure. Thus we say an opening entry is passed. Okay. So 1,40,000 will serve as a balancing figure and the difference will be now capital. The problem says to prepare now the ledger for Vinod's capital. So I have opened ledger for Vinod capital. Okay. So if Vinod is appearing in the credit side, the opposite items, all these are on the debit side. Okay. So now if I want to enter cash, stock, raw machinery, I should only enter them where means in the credit side of Vinod's capital. Okay. So now I start entering it. Okay. 2018 January 1st by, I don't write individually cash, stock, etc. but I say only balance brought down. So what is actually Vinod's capital means? That 1,40,000, that only I will be showing here. Clear? So I am not going to show individually cash, stock, raw machinery, because if I show separately, the total will come to how much? This 1,50,000. Okay. So that may not be right thing. So I will say by balance brought down and show 1,40,000. So as I told you, their opposite is the debit, means in the ledger will be the credit. So this is a must that you should understand, students, clearly. Okay. Next, let us now actually problem asks you to just solve for prepare a ledger only for Vinod, but I would like to show how it may appear in other accounts. So quickly we'll see. Cash I have opened. Okay. So in cash what will come means, so again 2018 January 1, all assets will take debit balance, students, and the amount of cash says how much. Okay. It should be rupees 40,000. Okay. Similarly I will say 2018 January 1 to balance brought down, cash is 50,000. Okay. So you should also know how to prepare for other ledger. That's why I am showing you even other accounts. Similarly, RAM 2018 January 1, I say to balance brought down. For RAM the amount is 20,000. Machinery also it's asset. So what I say, to January 1 to balance brought down, machinery value is how much? Rupees 40,000. And Vijay is a creditor, so we will show in the credit side. Okay. By balance brought down, his amount is 10,000. So only this Vijay and capital of Vinod shows debit balance, credit balance, sorry, by balance it is okay, credit balance. All others will take that means all the others are assets. These four are the assets, will take a debit balance. Okay, students, you are able to follow now.